So if you've been searching for how to get the perfect credit score to buy a home or hit an 800 plus credit score fast, then this video is what you need. Because today I'm walking you through my exact 7-day plan to boost your credit score, and it's the same method that's helped thousands of first-time homebuyers improve their credit fast and qualify for the best mortgage rates and programs. So if you're serious about building excellent credit, saving money on interest, and finally understanding what really moves your score, then stick with me through this one, and you don't even need to spend a dime to start making progress today. So day one is you want to pull and review your credit reports, because in order to improve your credit score fast, the first step is really knowing exactly what's on your credit report to begin with. So you want to go to this website right here, and this is the official site authorized by federal law to provide you for free credit reports from all the 3 bureaus. Then you want to download all 3 reports, print them out, and carefully review them for any negative remarks like late payments, collection charge-offs, accounts in dispute, and also highlight anything that looks suspicious or inaccurate. And this is really going to be your credit repair foundation, because before you can even boost your score, you need to identify and clean up what's holding it back. It's important to understand that mortgage lenders and bank use your middle score out of all 3 scores. So once you reviewed your credit reports, the next step to improving your credit score is consistent tracking. So you want to set up creditor monitoring so that you can see your progress in real time and catch any changes that happen fast. And for mortgage-specific credit scores, you want to use My FICO, and this will show you your actual FICO scores, including the versions that lenders use to approve your home loans. And this will give you more of a realistic picture of how close you are to qualifying for the best mortgage rates. And if you're just getting started, you can also look at either CreditWise by Capital One is a great free option, or other major credit cards. They offer monthly FICO updates too, so you just want to check your app on that. But the reason why this matters is because mortgage lenders use FICO score either 2, 4, or 5, not your Vantage score. So you want to make sure that you're tracking the right score to help you focus your efforts and avoid surprises when you go to apply for a home loan. Now, before we go into day 3 on how to help clean up your payment history, if you're planning to buy a house in 2025, make sure you hit that subscribe button so you get notified every time I put a video out. So payment history makes up almost 35% of your credit score, and it's critical if you're planning to buy a home, because lenders want to see that you've been consistently paying your bills on time, especially for the last 12 to 24 months. Because even one recent late payment can cost you not only a better rate, but almost the mortgage approval entirely. So here's what you want to do. Step 1, review every late payment that's on your report. If something looks incorrect, like a payment was marked late when you know it wasn't, then you want to dispute it in writing, not online, because written disputes give you stronger consumer protection and more flexibility to resolve it. Now, if the late payment is truly accurate, then what you can do is ask them to delete it. You can send in a deletion letter. That's where you politely explain what happened, like job loss, medical emergency, temporary hardship, and show that your account is now current, and ask them to remove the negative remark. And the reason why this is very important, because sometimes, even if you have a high credit score, a recent 30-day late payment can almost deny your mortgage application from the bank. So you want to start cleaning up this now, so that gives you more options as far when it comes to loan programs, and can save you thousands over the life of the loan. So day 4 is all about prevention. So you want to set up auto pay on all of your credit cards and loans for at least the minimum payments that's due. Now, if you don't like auto pay, then create a system where you check and pay bills twice a month, either on the 1st and again on the 15th, because late payments can really impact your credit score. One late payment can lower your credit score anywhere from 60 to 80 points, so prevention is really the key here. Now let's go into day 5 on lowering your credit utilization. So credit utilization makes up about 30% of your FICO score. This is one of the fastest ways to boost your credit if you're planning to buy a home, because lenders don't just look at your score, they also look at why your score is what it is, and high revolving debt signals risk even if you're never late. So here's what utilization is. It's how much of your credit limit that you're using. So if your total credit limit is $10,000 and you have a balance of $5,000, your utilization is going to be 50%, and that's possibly hurting your mortgage approval and also your credit score in total. So the target for your mortgage readiness is you really want it to be anywhere below 20 to 10%, and you'll start seeing significant credit score increase with this. And here's why it matters, because even if your score is good, high utilization can get your loan flagged or reduce the amount that you qualify for. Lowering your balances not only boosts your credit score, but also improves what's called your debt to income ratio, which directly affects your mortgage approval. So here's a pro tip: stop charging more while you're trying to pay down during this process, so that you're focused on paying them down with intention. Starting with the cards that are closest to being maxed out, you're going to see the most increase and the most benefit. It's more effective in increasing your credit score. So if you're planning to buy a home, this is one of the fastest credit hacks to improve your mortgage score without having to pay off a dime of debt. So here's how it works. You want to ask your credit card company for a credit limit increase, because when your credit limit increases and your balance stays the same, then your credit utilization ratio drops, and that can instantly improve your FICO score. Now, here's why this matters for mortgages, because the lenders, again, they use your FICO score, not your Credit Karma score, to determine not only your interest rate, but also your loan approval as well. And lower utilization, it tells lenders that you're managing your debt well, which can be the difference between not only getting a lower rate, but also getting denied. So here's how you can request it. So most credit card companies let you do this online in about 2 to 3 minutes, and many won't even do a hard inquiry. You just want to make sure that you have had a few months of on-time payments and low balance before you request this. Now, and here's the thing: you want to make sure that you do this before you're applying for a mortgage, not during, because you want your score boost to hit before lenders pull your credit. Now let's go into day 7. Okay, so we already covered about 65% of what makes up your credit score. Now let's go over the final 3 components that can give you the edge when it comes to a mortgage approval and boost your credit score. So the remaining factors are going to be length of credit history. That makes about 15%, because lenders prefer to see really long-standing and responsible credit use. Then is a good mix of credit mix, that makes up about 10%, because a healthy blend of like credit cards, installment loans shows that you can handle different types of debt. Now, new credit inquiries, that makes about 10%, because too many of these can cause red flags for mortgage lenders. So here's are some action steps that you can take. You can become an authorized user on a family member's long-standing credit card with on-time payments. This can boost your credit score and improve your credit age instantly without having a hard credit inquiry. Then check your credit mix. If you only have credit cards and no loans, consider adding like small installment loans like credit builder loans, or you can use student loans or auto loans to satisfy this. Also, you want to avoid opening any new lines of credits in the months that you're applying for a mortgage, because inquiry lowers your score slightly and lenders may see it as like a risky behavior. So, and you also only want to dispute only unauthorized inquiries, because legitimately ones fades and only impacts your score for about 90 to 100 days, and they fall off entirely after 2 years. Okay, so now that we went over exactly the steps to take to boost your credit score, let's go over now your target credit score for each home loan type. Now, generally speaking, the higher your credit score, the lower interest rate, or the better your interest rate is going to get. It also gives you a lot more options when it comes to loan programs. Now, there's really 4 major types of loan programs. Number 1, you have an FHA loan. Now, FHA loan is going to be best suited for those with a high amount of debt, and also it's the most lenient when it comes to credit score and recent credit events. Generally speaking, the lowest credit score is going to be a 620. Now, you will see a lot of places advertise that you can go down to a 500 to even like a 580 credit score, which that may be true, but the thing is you're going to need a lot higher down payment. You're also going to get killed on the rate and the fees. So really that next benchmark is going to be a 620 if you want the minimum down payment and a decent interest rate. Then you have a conventional loan, and really conventional loans are best suited for those with a higher credit score, generally speaking 690 into the 700s. Then you have a USDA loan, and USDA loans are for those that are buying a home outside of the city limits in rural areas. Minimum credit score is going to be 645. Then you have a VA loan, and those are for those that are either active military or veterans, and minimum credit score is going to be 620. Now, sometimes you can go a little bit lower with a VA home loan. You may start seeing results in about 30 days or less, especially if you've paid down debt or cleaned up any recent negative items. And remember, focus on fixing recent credit issues first because they're going to have the biggest impact on your FICO mortgage score. And most importantly, maintain the on-time habits like on-time payments, low credit usage, and no unnecessary new credit. Now, if you like this video, then you're gonna love the video that I just put out that went over the top 5 most crucial home buying mistakes that first-time home buyers make.